Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that nice pump on the Bitcoin chart. Guys, as you can see, Bitcoin is pumping off of the white EMAs that I was pointing out in the last episode. Of course, I did go back in history and show you how that is a good basing platform for potential longs. And in the last episode, I did give you a potential long setup as a hedge to the upside in case this trend to the downside ends up turning around. Now, Trump did come out today and he did announce that he's going to lower tariffs on most of the countries around the world, with possibly just the exception of China, which would still retain over 100% tariffs. Now, the U.S. economy is highly dependent on Chinese imports, so it remains to be seen if that's enough to really turn this trend around, or if we're still going to have a suppressive effect maybe for a couple more months until, let's say, the Federal Reserve is ready to come in with an injection of liquidity. Until then, we do have to be cautiously optimistic that this could result in a trend break, as the markets have been very sour. They've been very bitter on these tariffs, and of course, any good news on the tariffs front could just result in a short squeeze to the upside, or just some type of a pity bounce at a minimum. Now, we are entering levels pardon me, which I do think are good to see a potential turnaround here. We're fast approaching the neutral point around 83. Let's just put that at 500. Where if we do flip those levels, we're going to end up in a situation where we can see a squeeze with that 200 EMA, and then that's going to be that classic squeeze potentially to the upside that I was talking about in the last episode, which is why we ended up posting this long setup. Now, if we do get a little bit of a rejection here, we are in the right area for a lower high, and if this market just decides that not enough has been done on the tariff front, then we do have a measured move to the downside somewhere around 68,000 to 66,000, which is the extreme bearish harmonic target off of this crab harmonic that I've been talking about for a couple months now. As for our little local area, you can see that we do have that baby shark harmonic here. That baby shark harmonic did get a little bit of a type 2 reaction, and we did put in a floor above 76,000, which was the key level that I was giving my members of the group. Whereas if we did close yesterday's candle above 76,000, then I would consider this long setup to still be in play. Now, if you do look at the close of the candle there, in fact, we closed at approximately 76,200, and while we did wick down the following morning, that does seem to be just some type of fake out, shakeout before the breakout to the upside here, guys. And of course, yesterday's candle is what mattered. Why did that matter? Because we were setting up a bullish divergence, and in fact, we're going to continue to have that bullish divergence on multiple time frames, including possibly the 3-day, as long as we hold above what's now going to be approximately $77,000 to $78,000. Okay, as long as we're above the highs of these candles back here, pretty much above my entry, above that 300 MA here. If we can show strength above support of these prior candles, we're still going to be in the mix for that play to the upside and potentially the breakout. Now, I would expect some type of reaction, but again, like just anything above 76 is still looking pretty good. That's going to be your real entry on a higher low. If you do get 77 or 78, that's going to look even better for the market. And in fact, yeah, we really do have the potential for a squeeze to the upside and potentially a breakout here, because on the 3-day, we're looking pretty good as well, and you can see that we could very easily just bullishly engulf this entire last downtrend here and to get into a squeeze to the upside. So we're going to be looking forward to that. This baby shark harmonic, it has reached its first realistic target. So to the Alpha fam who got in on this play, congratulations. That wasn't really much. It was just about a 3 to 5% play. But as you can see here at the bottom of that setup that I gave you, we didn't get stopped out. Okay, so that was a completely valid play. We did validate that with the bullish divergence and the close yesterday. And so this hedge to the upside can continue to run. Now, it's up to you if you want to close your shorts or if you already did at that 11% mark where I did say those were healthy gains to be taking some profit, especially if you were levered. However, right now this market is still making up its mind. We haven't broken out yet. And so it can sometimes pay off to just hedge both directions until you have a clear setup. And in my mind, the clear setup is still going to be when we have that 200 EMA squeezing, right, with the 21. All right, with the 21 EMA. And if we can get some price action doing something like this, then that's going to look pretty good in my book. Okay, it's going to start looking like a inverted head and shoulders that may want to squeeze to the upside. So this is what I'm looking at right now. We are just very conscious and aware that we are fast approaching a possible rejection area. Rejected, 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 rejected. Are we going to get rejected again? It's very possible. So if you are in this long setup, you may want to skim a little bit of profits in this area and just expect a pullback. If we are able to achieve a higher low, that's going to be our first higher low in quite a while. And coming off of bullish divergence and also the positive news on the economic front, again, these are the areas that you probably would want to be taking a chance. Not financial advice, just telling you what I would be doing. Of course, it all depends on your own personal risk profile, but I did want to make sure to get this out to you so that you guys can have a little bit of guidance today, especially in these uncertain times. Now, if this baby shark harmonic is going to continue to play, we would expect some type of test of around 87. And really, we haven't broken out of this structure until we do put price action above 89K. So any type of rejection, even at 87, if this thing just goes straight vertical and taps 87 and then gets a long sell wick, that could be bad news. Maybe even that lower 60, that upper 60s, lower 70s target is in play. But, right now, I think we're going to give it the benefit of the doubt. We're going to see if we can set up that macro squeeze to the upside. And guys, you can see what happened last time. All right. So we had a very similar setup down here, which I also called in the group, which I also gave entries along this area before we had that massive breakout. And again, we started to take profits up here. We got out of the market down here. So I think the Alpha fam has been very well protected. But if you want to get in on the potential next squeeze, then you're going to have to just listen very carefully to what I'm saying right now. We could have some bouncing around. We could break out of this structure and have a deeper return than people think. We could still tag that lower 70s, upper 60s area, even if we do break out. Just because of how dramatic this downtrend has been. And so if we do get a breakout and they just decide, okay, well, we're going to have some more bad news, right? It's all politics based these days. Maybe there's a government shutdown before a negotiated deal. Maybe the Fed says something stupid, right? We could have a deeper return here, which then again can just get bought up, and we could see this type of chop and grind before they actually carve out an official bottom in this area. And then some disaster could come up that just dumps us. So we do want to be playing level by level. We don't want to get too emotional about these things. But of course, when the setup is there, you do want to take a little bit of risk, right, with proper risk management, just in case the trend does break. Now, in the case of the reversal back here, you can't see that it was just months and months and months of down. We finally got some signs of strength, but of course, they shot us back down a couple more times, right? And so we just sort of based off of that 200 EMA and the 300 EMA. And so could we just see some type of basing in this area? That would actually be a very good sign, because it's kind of like they're laying the foundation for the next house that they're going to build, right? And before you can build that wall structure to the upside, you really want to see a nice foundation being built. And then, we're going to see, where does the roof go? Maybe to that 120K area, right? We don't know. It could be just a small outside shed, right, on the front line or the backyard there. Or they could be building a multi-story apartment complex. We don't know, but we want to see that foundation be built. And of course, if you want to take a chance on that, you're going to buy in on lows, not necessarily FOMO in on pumps, okay? But because this market has been just repressed for a while now, there is some energy in the market behind this movement. You can see this is probably, let's say, wick to wick, probably about a good 11% move already. So that's a huge movement in the market. And, just understand that these things can come down just as hard. And that really what we're looking for is just that closure above that 76, 77 area. And especially if we can get a closure above this kind of 80, 78 to 80s area, that's going to look really good for these higher time frames, like the 3-day. It's just going to suggest that we're in a level above where we were before. Okay, and that's what we want to see as we get closer to that breakout. I think I'm going to end it there. That's your alpha for the day. Just to be open-minded to that hedge to the upside and that potential breakout that I was talking about in the last episode. Stay safe and happy trading.